Hey everybody, Steven Sitkowski here. Welcome to this edition of Market Insights. It is September the 9th, and we're going to be into fall before you know it. Crazy. All right. Everything that we do here is for educational and informational purposes only. It should not be considered as investment advice. So let's move into markets. Well, markets are trying to claw back losses from last week, did a pretty good job of it today. Uh, Dow is up 1.2%, both the S&P and the Nasdaq up 1.18%. So it's a fantastic day. By the way, nothing different today than last week. Just an attitude. The market going, oh, I think we've kind of overdone our selling. That was it. I got itchy nose. August CPI data due out on Wednesday. So that's inflation at the retail level. And the PPI numbers come out on Thursday. That's inflation at the wholesale level. So this could definitely be a market mover. 10-year Treasury, pretty steady at 3.708. And oil prices are down to $68 a barrel. Wasn't that long ago, they were above 80. So what are we watching this week? Really nothing of consequence happens until Wednesday. As I mentioned, the CPI numbers come out Thursday. We have initial jobless claims. Those have been forecasted down to 225,000. Then we get our PPI information. And then on Friday, consumer sentiment. So it's Wednesday, Thursday, Friday. That's when all the big stuff gets released. Market breadth last week. Given the fact that it was an awful week, when you look at new highs versus new lows on the New York Stock Exchange, it was great, 437 versus 136. Not so great for the NASDAQ, 271 to 359, but still, not a disaster. Look at last week's heat map. Now that was a disaster. Some huge losers. Broadcom, almost 15%. NVIDIA, 11.5%. Alphabet, almost 9%. Lilly, 6%. But when you take a step back and look at the last year, the numbers are very impressive. Costco 67, Walmart 41, Meta 69, Broadcom 64, Nvidia 130. So if you had your money in the right places over the last 12 months, your return should have been something north of 30%. Last week's big winners, most are in the conservative area. Market access, which is financial. We have a REIT, healthcare, AT&T, right? Schmuckers, Campbell's Soups. Percentage of stocks trading above their 50-day moving average fell from 81% last week to just 58% this week. Jobs report. So new initial jobs, they came in higher, but I'm telling you what's going on. They post these numbers and then there's a revision and then the numbers fall. So I don't know whether or not that's going to stick or not. Job openings is definitely trending down across the board. Recession watch, well, in the Sham rule, a sort of forecast recession based on the unemployment rate and the 3-day monthly moving average, signaling, okay, could be some issues out there. I don't see a recession right now. Things are too good. In fact, unemployment went from 4.3 to 4.2. So if you're just looking at that, GDP is relatively strong. Fed's getting ready to cut rates. Yeah, I don't see a recession. Who benefits from rate cuts, by the way? Interestingly, number one on the list, air transportation, financial services. That should make sense. Food kind of surprised me. And the fact that housing kind of underperformed really shocked me. I mean, it's still beneficial, but I would have thought housing would have been near the top of the list. Market sentiment now in the fear range. A week ago, greed. One bad week, people have gone from greed to fear. It's like I've said for years, markets are fickle. Inflation expectations are falling. Positive thing. When's Fed going to cut? They're going to cut in September. How much are they going to cut? They're going to cut 0.25%. And now the statistics are saying 73% chance of a quarter point, 27% chance of a 50 basis point. One-year sector returns. Well, the S&P 500 is up 22.65. We've only had two overperformers, technology and financials. Everything else is, and communication. Everything else has done something less than that. Now, industrials, utilities, REITs, I mean, they're hanging in there, staples, healthcare. The big drop off is here. Materials, discretionary, and energy, which is actually down for the last 12 months. Check the charts. Look at the SPY. This is the S&P 500. And you could see, we moved up above. We did almost an instant rollover, came below. And the real thing that we are watching on our side, can we get back above that 50-day moving average? If so, we'll be confident in a resumption that this market will head in the right direction. So we'll be watching that. The Qs are further away from their 50-day moving average. Look at that. That's awful, right? So anyway, we got to see what the rest of this week brings, the inflation numbers, all of that good stuff. Let me show you something you might find interesting. Kind of our track record on our trades this year. So for our inner circle, we do what we call trade ideas of the week. And we are tracking so far very close to 1% a day. Average return 18.9%, average days in the trade 19.2, win percentage 97.3. So this was as of the end of June. We typically update this quarterly, but pretty impressive to say the least. So in any event, so happy to have you with us. Once again, I'll be back next week. Until then, be safe, be blessed. Bye for now.